Now, one of the things that really worries me is to see how these things correlate very well over time. And we have gone multiple charts to see how trend lines touch accurately. It leaves me worried. And if you are worried, come to the comment section. Let me know if you are as worried as I am. Because every time I draw trends, especially on a higher time frame to see how they match very well, it leaves me extremely worried as to who is responsible, or does it show some kind of market predestined reaction? No one can actually tell, but really I'm on a mission to discover why these things are this way. I really get worried. I really get worried so much. I really get worried so much. And because of the consistency, because of the pattern. But it only tells you that this market is not for everybody, you know. So that's two SRO level, break of two SRO level, price returns here as a retest candle, and as well as a resistance becomes support on break of structure on monthly time frame after break of structure. And subsequently, that roof has been maintained. In fact, we came there in 2000 and let's put into perspective from after that retest in 2007, we came back 2009, entire 2009, we returned on that structure in 2015 and sold. We returned 2016 and sold, and we returned again in 2022. That is almost a 6 year gap, and market reacted. So what does that tell you? That's a psychological roof. That's psychological roof, very pivotal to price movement. And I also want to put it into perspective, knowing fully well that market has now the issues this price might return there and not respect that structure. So this is a valid roof, and I'm going to call that my monthly supply roof. The probability why price will react there again is very high because it's not every trader that understands this. It's not every trader that understands it. So the probability that price will do the same thing again on that ascending trend line, and it's a supply roof, is still very high because it's not every trader that sees it. So that is why price might likely do that again. So when next price comes there, there's a probability it will do the same again on that roof. The probability is very high. The reason is because it's not every trader that sees it. It's not every trader. It's not. So on technical, that becomes moving forward. That's a sell roof, and it's gonna be a while for price to get here. Gonna be a while, very long time. Last time it took 6 years. We got here in 2016. 2016 to 2022 is 4 plus 2. That's 6 years to get into that structure. And one more thing which we want to look at is which is the most important price action at the level is to see that there is a technical breakout followed by a technical retest, and subsequently after that buying has been struggling. The United States dollar diminishes, and this diminish in dollar appetite is evident on the chart and also shows the state of the US economy. We are seeing some resilience, but inflation is somewhat high, and everybody is looking out for less risk investment. And let's not put that there. I also put that into perspective. We have here as these emanating from the current retail structures we have, and these are a common RS resistance becomes support and breakout structure on monthly time frame. And we have a breakout structure, break of RT RS and RS structure, breakout price returns here as a retest. And that's a RT slash SR. After breakout structure, we return there as a retest candle one. And subsequently we had that title for a long time from 2022. We had that again in 2023, and we return again in 2024, and we did that again in 2024 December before break of structure, and price returns here as a retest candle after break of 4 successful demand floors on a monthly time frame, and you have seen what price did there. So let me take that out because I'm watching the price action. So what we want is a potential breakout. So for you to get a true rally on a monthly time frame has to break out from the structure, and for us to see an upward movement. So we'll be watching it to see if price returns back to the buying floor. There's a buying floor on a monthly time frame, and I want to change the color to put it black. Black is pretty fine for me. So if that structure is broken, then it sets up a new rally, and we've seen an influx of liquidity, maybe possibly coming in back into the US 10-year Treasury bond yield. And of course, 10-year Treasury bond yield rise alongside DXY. Now this is a supply roof. Then we're looking for a demand floor on a monthly time frame. We have as a monthly trend line. So let's see how we go. So this is our floor for the month, and they are all technically SRO level. There is no retest on the floor. What we have is an outright trend. Support become resistance and break of structure on monthly time frame 1. Support become resistance 2 times 2021 and the year before that. And they will return here in the July 2025. And you have seen that price has set up beautiful. So I want to see a breakout from that structure. So once I see a breakout from that structure on a monthly time frame, we're looking for break and close. So whatever that sets the current monthly candle is already on a bullish pedestal. If it breaks out from that structure, then we know that price is going up. So at the moment, this remains a value structure on a monthly time frame. It remains a value structure on a monthly time frame, and these are our demand floor. Let me also put that up to put into perspective. So that's my monthly floor for the dollar index. I'll be looking at US 10-year Treasury bond yield to see the bond yield performance. We have seen the Federal Reserve cut interest rates by 25 basis points from 4.25, 4.5 to 4.0, 4.25, and the market has adjusted to that. But the current trade escalation by way of tariff between China and US could technically change trade dynamics, and we have seen crypto and gold react towards the close of market on Friday. As the week opens, it's going to open a very strong volatile, and we might likely see some liquidity influx into the United States, or it could be a pullout. Whatever it happens, we'll be watching the charts to get an overview and guide our directional bias. So this is what we have at the moment on a monthly time frame. So on a monthly time frame, we're on a very strong ascending trend line. This is a demand floor and as well as an ascending trend line. Let me also put that ascending trend line up to put it into perspective. Ascending trend line. So that's what we've got there. So let's see, and this is a descending trend line DTL. DTL. So what we have here is if we break out from here, we'll go up. So now what it means on a lower time frame, we'll look out for more buy opportunities on a lower time frame. We'll continue to look for more buy opportunities on a lower time frame until we break out from this structure. Then we'll now hold our long position. It's just that way. It's just that way. Got a beautiful cross over there. Can you see that? So everything you see in the financial market, it's already planned. Look at that resistance to that upswing. It started from here. Let's also put it into perspective. Let's put everything into perspective to avoid oversight. You know, it's our biggest challenge in trading is oversight. If we can avoid it, anybody is capable of having a complete win for a very long time. But oversight all the time. So it's best to understand this. This is a retest candle after break of structure, break of that support structure, SR level, break of that SR level. Price can be a retested on ascending trend line. That's a two retest. It came back and did the same thing here, broke the structure and returned again on the same fate and on the same fate. And finally, you have seen it tanking. So what that means is that this will also will be a layer, first layer of resistance, the upswing should price upswings again on a monthly time frame, which is actually a long time. It's actually a very long time. So we hope that let's see what price does at that level. This will have a monthly time frame. So if we break out from here, then we can reclaim 113. But it's going to be a very long time for dollar to recover. This is already an M structure. You can see an M structure here. This is an M structure, a double top and break of a neckline. So there's a very high probability that you have a bearish drop moving forward from here. The probability is very high. Let me also put that into perspective. There is a very high probability that you could see dollar outright breakouts. Let me put that. We have a double top here, a breakout of a neckline, and if this happens, if you get a breakout from here, of course, this is a bearish drop. It's gonna be a strong bearish drop. Another bearish drop, if that's possible, then we look at other possible case scenarios where price can be held. And one of the key areas I am anticipating if we have a breakout from there, it's going to be at this level. It's a key level there. So this is a key level. So in case the price falls out from there, most likely that it could come here. The probability is very high. That is a key level to wait for price around the 89 level plus. So this is very much possible that we could fall out and come into that zone. So if we come into the zone, then on technical, that becomes a buy floor. So I'll also put that up as a demand floor. So in the future, if we don't know what's going on with the US, we don't know what's going on, but we'll continue to watch the chart. So this is a worst case scenario. A pull out from this ascending trend line will bring price into the structure. This is an ascending trend line ATL. So let's see if dollar can reclaim above 100, we sustain and break below 86 level. It's gonna be a bearish drop to 96 and 100. Both are all litmus tests